Good day and welcome to the personal finance segment. It's our first episode, and normally I'd start out by introducing a guest, but this entire episode is dedicated to introducing a guest. So without further ado, Mr. Ross, welcome to the podcast.
Okay, well, thank you very much, Randy, for the opportunity. It's great. It's my first one, so I'm sure we all miss personal interaction. So I think this is what we will have to get used to, I guess.
It's that new innovation, the things that we get used to. I think I remember way back when we were all skeptical to get on a Skype call or on a video call because we all had issues about privacy. But like now, it's become the new norm. So it's kind of just showing us how quickly we have to adapt to changes and times, and there's new trends that kind of go in. But let's take it back to where it all began. So where did you grow up?
Grew up in the Northwest Province, a farm boy. Grew up on a maize and cattle farm. Then at high school, so I was on a small farm school, 70-kid primary school, and then you go to the big league. And then I went to Clarksdorp High School, to hostel. You obviously, from the farm, you have to go to the hostel, and did my matric there, and then off went to Northwest University, studied my BCom, eventually did my honors in economy and marketing. I had the option to actually double up, so I decided on the economy and the marketing. And then from there I started my career at Momentum Life at that stage. And sure, that was in 1990, then I started my first job at Momentum. And then Momentum, I was there for about seven years.
And can we actually go back to varsity?
Yeah, sure.
Why did you decide to pick the major you picked? Was there like passion or like I just want to get to know the reason your thought process in choosing the field that you chose.
At school, my big passion was always I wanted to become a game ranger or professional hunter. And at that stage, we had a farm up in the Lowveld, so I grew up hunting that type of stuff through the Big Five. And I guess when I said to my parents, this is what I want to do, they said, there's no way you will do that. There's no money in it.
Yeah.
You will do a BCom, and then I applied for a bursary and then I got a bursary to do my BCom.
Yeah.
And I had to, looking back now, I mean, it's obviously young people now, we always say they must do what they must do.
Yeah.
For me, eventually, when you started to think about it, and a lot of people ask me, so why did you, economy, I was always interested in it.
Yeah.
I guess more on the marketing side, I was also quite interested in marketing. As it pass on, it's like I always say to people, there's only one job in the world where you can earn money, 365 days per annum, every second of the day, and that is managing people's money, because you charge a percentage of their assets, so you can sit on the beach and earn money.
That's one way to look at it, yeah.
Any other industry in the world, you have to build time, so which is that's where I decided, maybe this is what I need to get into.
From hunting to economy, yeah.
Eventually life just takes a part in it, it's like you don't sit down and say, listen, one day I will become this. And to a lot of people or young people that I talk to, you have to take the road that you're on, so you can't sit, because a lot of people sit and say, listen, how can I become a fund manager? And I say to people, well, it depends on your journey where you want to end up. You don't just become a fund manager. You probably sit and work like myself. I worked in a call center, so I answered telephones for 2 years, so. And then opportunities happen. You must just be open if you see an opportunity and jump for it. Eventually you end up in where you want to be, but that's a process of sometimes 10, 15 years, so it's not a perfect spot plan that you work out, so, and you must not be, I think, also content to eventually say, well, it didn't happen what I think of, but how can I get there? So,
okay.
So in short, that's how economy is always something I'm interested in. I read a lot about it.
Yeah.
Although I say you don't trust any economist, so
The contradictory.
You know,
Yeah.
I said to people, that's economist is the only profession in the world where you can be right but always wrong. So you, none of what they say will happen eventually.
Yeah.
So,
It's a huge. So then you mentioned you started out at Momentum, and you said you started as a call center clerk. So let's walk through that. It's an interesting start. After your BCom degree, you went to Momentum.
Yeah, so it was interesting at Momentum at that stage. They started a project where they had this: any client must be able to be dealt with at the spot. So they call it a one-stop service nowadays, I guess is the right word. It's actually to get someone or a client that phones and a person can answer any query, from a simplistic, what do you need to fill in this form, to be able to do an actuarial calculation and that type of stuff. So we went through a whole 3-month course, and if you pass with your 95%, then you got the job. And then you start to answer telephones, It's like, and interesting that model, Momentum at that stage won the best service company for 3 years in a row. And that was I think that was actually the point where, it's quite boring, and obviously you get all the difficult people, and why is my surrender value so low, and you're a bunch of scallums, and so I think you start to understand people, it's because to be on a phone and not allowed to put down the phone and not allowed to put it through. If the person say, "Listen, I want to speak to your boss," you say, "Well, you can't. I'm your only point of entry, but ask me the most difficult question you can. I can handle it."
So you had to basically answer any question that came up. So you had to be multifaceted.
Any answer that came up, So I still to today believe, for me and for a lot of people, I still do believe that, if you work in a service industry and in that format, it's you start to understand the business and the industry in and out, because if you don't have an answer, you say, "Listen, don't worry, I will get the answer for you. We'll phone you back in an hour," and then you start to run and find out, so it's the best learning school to understand the industry and the business, as quick as you can, so eventually you know that business in and out, from the distribution, calculations, how does it work, how does bonuses work within the old conventional policies. Yeah, so eventually I went through that process, and then there was a business idea at that stage to start a platform unit trust business. And they asked us who wants to go into that call center, and I decided, geez, I had enough of surrender penalty questions. I'd rather go and ask a unit trust question. That tends to be more my line of business and economy, and that. So there I went, and then we got there, and there was nothing. So I got involved into all the business development and set up the call center, and eventually I got involved on the marketing and sales side of it. And when I left Momentum, I was in charge of what we call the operational marketing operations, is all to do with product development and sales. And then I left Momentum in 2000, and I joined PSG, again as a business analyst first. And at that stage, it was just the start of the whole financial intermediary service, or the phase, as we call it, law in South Africa. And I was in charge of what is the impact for PSG and that whole thing. And I still joke to a lot of people. I said I worked myself again out of a job within 2 months, because when I presented the implications of legal changes, and I remember I had to present to the exco at that stage, explained, all this new paperwork, and you have to take minutes, and people, you have. And I remember I was like 5 minutes in my presentation, and all the old guys said to me, they stand up and said, "This will never happen. This is ridiculous." And then I wanted to explain, "No, it is not. This is the way it's going." And then my boss at that stage, he said, "No, just sit down. Now I'm without a job." And then, luckily, the managing director of the unit trust business, she left to start a new business. And then they asked me whether I don't want to take that opportunity. And that's how I got into the unit trust side of PSG.
Ooh, yeah.
And
so right in the thick of things. Yeah.
Yes, they are into the thick of things, inheriting a loss-making business. We had about 500 million on assets under management, one equity fund and one money market fund. And then PSG was is still, I think, until today, very entrepreneurial, and they gave us, blank slate, to build a business. So I was in that for about, 13 years at PSG.
Yeah.
And we built out that asset management business. When I left, it had about 32 odd billion under management. And, I decided, well, it's a corporate again, so obviously businesses get big and more red tape and more structure, which you obviously need if you're a big business. And then I decided to take a bit of a sabbatical. I was always interested in, and I knew my interaction with clients and interaction with advisors. Over the years, you start to get involved with what we call the front face, where you're client facing.
Yeah.
And when I took that sabbatical, read a lot, and, decided, that's where I want to make a difference, speak to the end investor. And I think our industry is, it's quite complicated. And I think by design, I was part of the complication. And then you start to end up to say, listen, but how can we make it easier for people to understand business and investments and, that type of thing. So that's where I ended off starting a private client wealth business, So we're already 4 years old now again, and we manage just about 600 million of assets. Quite, I think, small in a bigger scheme.
Yeah.
But big enough to obviously allow ourselves to build the way we want. So it's still, sometimes you reinvest in the business, don't earn any money, and then you earn money again, so that's where I hold my career up to where we are now, so a bit of a jack of all trades, I would guess.
Right.
But loving the client interaction, that's what we like.
Okay, so you start off by saying, the reason why you actually wanted to go into the economy, markets. You said that you had a passion. That's where you always were. Quick question: what you touched on with when the business always got big, you diverted then and went into like a new role. You adapt well to change. So where would you attribute that to?
For me personally, I think a lot of people try and map out a perfect structure. For me, I've always been a person that I think entrepreneurial is the one thing. And having that entrepreneurial spirit, I always have to say, a lot of people that have plans, It's easy to make a plan. It's about the execution of that plan, So I tend to be very quick on execution. I've got an idea what to do, and then I execute. And, if something don't work out exactly, you must be quick to rechange and revisit and then action again, So I think that's how you obviously get to a point where it wasn't mapped out like, listen, I want to be an asset manager in the end. I've always been knowing it will be either a quasi asset management client interfacing type of business, because I think that's what I like. I like the people interaction.
Yeah.
And obviously as you go along, then you realize the more you speak to people, you start to realize, there's such a big, I think, misunderstanding of a lot of people, on exactly what does it take, in terms of investments and that type of thing, And I think as you go along, I always say to people, there's this misnomer that we all grow up with, that you think you can save yourself rich. And I always say to people, you can't save yourself rich. It has not happened. It will not happen.
Yeah.
the only reason you save is to keep up with inflation. That's the best you can do with saving. You save to, when you retire one day, to say, listen, I now earn exactly the same money that I'm pulling out of my own capital that what I earned when I was working. But you're not rich, you just keep up with inflation. And that's where you start to say, okay, but why is then some people way more wealthy than other people? And I think that's where I start to say, but it's all about taking risks, Obviously you hear about wealthy people that build businesses, but you don't hear about the failures. You only hear about the successes.
Yeah.
And it's that journey with people to sit with them and say, if you're 55 and you're closer to retirement, it's too late to really now say, listen, I now want to become rich. Because you now had the huge risk that you have to put that capital that you saved for 30 years, to put that on risk, you have an option to lose everything, So I think that's where young people, you read it all the time. You say, the sooner you start, the better. And I think for me, my own personal experience was, you start to understand that risk, you start to understand what does it mean to put your own investments up for risk, so you must do it while you can. If you're 30, you can do it because you can make up the difference again, but if you get to like 50, and I think that's where this whole concept that through the old traditional businesses, you tell people, save money, buy a policy, and you show them this 3 million or 5 million or 10 million that they will end up with when they retire. But nobody take them back to say, okay, but it sounds a lot of money, but you don't understand. It's just the same salary that you earn now. It's not, you don't become rich.
If you look at it in that aspect,
So that's that journey for me now with sitting with people and explaining that how do you need to understand risk in your life, So, for me, it's risk is a simplistic. A lot of people put numbers to it, and our industry loves numbers, sharp ratios and Sortino ratios, and you try to explain to people that risk. But, the simplistic part of risk is, what is the chance to lose your money? It's as simple as it. If you have 100 Rand, what is the chance of the risk losing 50% of it? And then you start to say to people, like I said, do you understand that if you've got 100 Rand and you lose 50%, then I always say, how much do you have left? And they said 50. I said, so how much do you need to make to get back to your 100 Rand? Then they look a bit dumbfounded and I said, you need to make 100%. Then people start to understand the impact of losing money. You lose only 50%, but you need to make 100% to get back to your 100. And I think that's where people that's why I love it. That's why I love what I do, to sit with people. And I always say to people, if you look at the returns of markets, you say, well, markets return, say, inflation plus, it was always like inflation plus 9, 10%. Maybe it's now with a low return, it's maybe inflation plus 8. You say, okay, so if inflation is like 2 or 3%, maybe you can get 12% on the highest risk side of it from a market point of view. And they said, they understand that. So I said, okay, so now you come to me with someone telling you that you can make 20 or 22%. So I said to them, so you understand that you are taking double the risk of the highest risk, which is the market. So what is then your chances to lose money? So I think there's a lot of people going and obviously falling for,
get rich quick.
Someone can offer me this type of return.
Yeah. And
and you have to put that in perspective, so.
And I think also the issue is that in our field is that there are so many people that try to make these things so complex, like there are very few people that actually break things down. And what I've seen a lot, even if you look at the financial crisis, there's all these complex products that they sell. The complexities is what they sell. If you ask them to explain, it's like, it's just too complex to explain. You never really explain to the end user what it is they're buying, and that's when they don't really know, okay, what's actually in my products, and the risk and return profiles there. And there are very few people that actually advise them, and simplify what they're doing, and that's kind of how people are taken advantage of, and that's how people may lose a lot of money.
Yeah, 100%. And there's one of the pieces I read before, because we did a lot of research and reading before we started our business and the private client business now. And I mean, I will send it to you, and it's called Beyond Markowitz. It's like we follow the wealth allocation framework. And I think a lot of young people, they understand this modern portfolio theory, the risk return and asset allocation and that type of thing. And when you start to look at it, the industry tend to put people into a pigeonhole. We all did this risk return profiles, and, it's like a questionnaire, and people come out either conservative or high risk or whatever.
Yeah.
But when you go through a process, it's like I've been part of, about at least 3 projects where we designed these questionnaires, and, you're always the guinea pig, you go through and you ask the questions, and I've my whole life come through as a conservative investor. When I was 24, I was branded a conservative investor. And if I fill in that questionnaire today again, I will come out as a conservative investor. So a lot of businesses took that answer and then put myself into a product mix to say, listen, I'm conservative. So a conservative investor need to have like 50% in equities and 20% in cash and the balance in bonds. And this is your package because you're a conservative investor. The reality though is, if you're 25 years old, it does not make sense to be a conservative investor. Although your personal profile tells you conservative, you should be an aggressive investor. And I think that's where the old traditional way of putting money into a package, we actually went the other way and said, listen, no, your pot of money must be associated to what you want to do with it. And that's where you actually got pots, where you say one pot is a conservative pot because that's what, if you lose your job, do you have money to live by for another year? Do you have life covered? You've got a medical aid. Then you say, okay, you tick that boxes. Then you move to the other pot and say, listen, but how will you keep up with inflation? And that's where you start with your pension or your monthly savings plan. And then on the other end, that's where we say, that's where you really become wealthy. That's where you take a serious risk on, call it a single stock. You decided Sasol is my bet, it's on 20 Rand, and you go and borrow money and you go in there. Now it's like a lotto. It's either you win or you lose. Or it can be your own business. And that's where people catapult themselves out of that, keep up with inflation. And that's what we tell people. If you're there and you get to retirement, now you have to move that risk pot. You have to de-risk yourself.
Because you've...
And I think that's a lot of what happened with people. They shift from either ultra-conservative and to put their money and where they can lose all of it. You see it a lot of times. Retired people, they got their house paid off, they got a little pension, and maybe they've got like excess cash in a money market. Then there's someone coming by and tell them they can get 20 or 30% return. Now they take that money, whoop, and they put it again in a high risk where you can lose it. People tend to shift from the one to the other. It's like, so that's, a lot of people ask me, so what do you do? So we don't sell products. I said, I think we're closer to being a psychologist, being that mentor, sitting with people and going through that process of, if you want to buy a car, don't you need to just buy a good second-hand car? Why do you want a new car? Or I want to now suddenly travel overseas. I said, well, if it costs you 100,000, can't you just go local or do it? You can't really afford it, so that's what I think that's, call it the coaching part of our job, which I enjoy. The products must just pull in to get you there, it's just the vehicle. and it has changed a lot. That what you say is, complicated products and people selling. We don't sell products. I think we sell a journey. I think that's what we do at the moment. And that's the part that you need to keep on learning, and, how things change and people change. And now suddenly with COVID, there's suddenly a new angle to this whole thing.
It's so many different considerations.
Yeah. So, I mean, it's our industry and the world is changing, and we need to adapt, I think, with it. We have to. It's no choice of it.
Yeah.
But so that's, in short, I guess, my whole journey from varsity to where we are now, and learning every day and trying to make a difference, and
I think even like you coming on this podcast right now is you're showing your commitment to trying to make a difference and impacting young lives, and also displaying, as you say, coaching in a sense. That's actually very powerful. I think I felt like you're speaking to me right there. Taking that in. But thank you. That's all we have time for today. And to all our listeners, thank you so much for tuning in. Remember to subscribe to all our social media platforms at FinChat.co. Subscribe to our weekly newsletter where we have reports that get sent out weekly. Give us a favorable rating on all your podcast platforms, and we can't wait to see you on the next podcast. Thank you so much, and to our guests, thank you for coming, and we'll see you next time.